you now, blocked credit under the input tax credit means what? The credit not allowed. Section 17, subsection 5, we have so many clauses, clause A to clause I with amended provisions. The big quantum of a list has been inserted. Credit allowed, not allowed, if allowed, on what exceptional basis allowed. I am now going to refer to you. Presenting here. Assume a scenario, namely Raj Limited, a registered person being a trader in the laptop. That means buying and selling of laptops. Raj Limited, a registered person buying and selling the laptops, who is a trader, purchased vehicles seating capacity less than or equal to 13 persons, including driver. Cars purchase for offices only. But the law of the land here says that, hey, Raj Limited, for you, these vehicles specifically mentioned under the blocked credit category, even though you purchase by payment of so much of 50 lakhs of rupees for these vehicles, and IGST paid thereon, for example, 28%, 14 lakhs, that 14 lakhs what you paid the GST on such motor vehicles meant for transportation of passengers where the seating capacity does not exceed 13, which include driver. In that case, input tax credit not allowed for you. 14 lakh rupees input tax credit not allowed for you. ITC not allowed for you. See here, ITC not allowed for you. Then entire 64 lakhs will form part of the cost of purchase to Raj Limited to claim depreciation under GST. Depreciation under the Income Tax Act. But GST credit not allowed. Capitalize the GST along with the cost of the capital goods to claim depreciation Income Tax Act. Got the clarity? Any difficulty in the given case? But it is specifically mentioned passenger vehicle, which includes this also. Which one? The two-wheelers. If you refer here, my dear friends, two-wheelers, two-wheeler, two persons, not exceeding 13. In that case, ITC not allowed. When you come to two-wheelers, especially, my dear, there is a concept called CC capacity. If the two-wheeler CC, cubic centimeter CC, capacity of the vehicle, two-wheeler, less than 25 cc, in that case, that is not come under the motor vehicle, under the Motor Vehicle Act. In such cases, such motor vehicle input tax credit is allowed. What do you mean this? How to understand that? I will explain here with the help of following example. Look here, this vehicle whose CC is not exceeding 25. That means less than or equal to 25 cc vehicle, which is not a motor vehicle, required to be registered under the Motor Vehicle Act also. In that case, what is not a motor vehicle is a plant and machinery. As a result, ITC on such motor vehicle is well allowed. Well allowed, my dear, well allowed. This two-wheelers CC is not exceeding 25 cc. Question will come in the exam to twist. A motor vehicle purchased by a registered person whose CC capacity is less than or equal to 25 for rupees 10 lakhs. So many vehicles purchased by paying the GST 18%, 1 lakh 80, ITC allowed or not, like that they will ask in the examination. In that case, you should be aware of that. 10 lakhs not one vehicle, 10 lakhs is 20 vehicles. If they purchase CC capacity less than or equal to 25, then not a motor vehicle, is a plant and machinery. What is not a motor vehicle? ITC well allowed. Further, my dear friends, please come back. Actually, where we are referring the motor vehicles. we are here. Raj Limited, for whom ITC not allowed. We are here. Why not allowed? Because the two-wheelers CC capacity is more than 25, or four-wheelers in that case whose seating capacity not exceeding 13 passengers. In that case, ITC not allowed. Further referring to you. Raj Limited, registered person, trading, buying and selling of laptops. Instead of purchase the vehicles, those vehicles just was shown to this particular vehicles, instead of purchasing, taken on hire basis, lease basis, rent basis, taken on rental basis. Seating capacity not exceeding 13, including driver. I am talking about only passenger vehicles, my dear, not goods carriage vehicle. Goods carriage vehicle, there is no blocked credit. As long as the goods carriage vehicle used in the course or furtherance of taxable output supply, you can avail the ITC. I am talking about only passenger vehicles whose seating capacity not exceeding 13, instead of buying, taken on rental basis, hire basis, leasing basis, ITC allowed to him. Also be not allowed ITC. 50 lakhs rupees of worth of the goods purchase by paying the IGST 18%, 9 lakhs, invoice price 59 lakhs. Entire invoice price is the cost of the purchases. ITC of rupees 9 lakhs not allowed. GST not allowed as ITC to Raj Limited. In exceptional cases allowed, when means if the same case where it is an obligatory for the Raj Limited to provide to its employees under the law. For example, state government of Tamil Nadu says, hey, Raj Limited, you have to provide employees pick-up and drop services. Otherwise, we will charge the penalty to you. Like that, government says. Under the obligation, Raj Limited providing cab services by taking on rental basis to their own employees. Then ITC is allowed. It is an obligation for an employer to provide the same to its employees. Then ITC is allowed to Raj Limited. Is clear? Further, my dear sir, ex-limited registered person, cars are purchased for what purpose? Further supply, buying and selling of vehicles, transportation of passengers purpose, and paying the GST 12% where they are eligible to avail ITC. Importing training on driving such motor vehicles. If these vehicles seating capacity not exceeding 13 persons, including driver, ITC is allowed if ex-limited being registered person purchase these vehicles for what purpose? Further supply purpose. Supply only includes sale. It may be anything as referred under section 7, section 1 clause A, supply of goods or services such as sale, transfer, barter, exchange, license, lease, rental or disposal in the course or furtherance of business for consideration. As you are aware of that, no, like that any further supply, that means that if I am purchasing these vehicles for selling purpose or otherwise I have purchased this by giving on rental basis. I am giving on rental basis. In that case, further supply. One can avail ITC? Yes. Or transportation of passenger purpose. These vehicles I purchased for transport of passengers purpose only. I am using where I am going to pay the tax on output supply 12%. Can avail ITC? Yes, you can avail ITC. Ex-limited can avail ITC. Entire rupees 14 lakhs GST paid on such purchases allowed as ITC. Exceptions what are they? For further supply of these vehicles, transportation of registered person, transportation of a passenger's purpose they purchase, or imparting training motor skill or driving skills, the learning activities purpose. My name is Maruti Suzuki Driving Skills Private Limited. I purchase these vehicles to provide the driving skills to my customers. Therefore, I eligible to avail ITC on such purchase of vehicles. Any doubt in the given case, my dear sir? Any doubt? Further referring from here, even the two-wheelers purchase, 'whose CC more than 25, purchase for further supply, or transports for passengers, imparting training and driving of such motor vehicles. ITC allowed. ITC allowed. Further referring to here. Now referring here, X Limited being a registered person, purchase forklift for factory use. This forklift can be used within the factory premises. One person seating capacity only. ITC is allowed? Well allowed. Why? It is not the motor vehicle which is required to be registered under the Motor Vehicle Act. Resultantly, ITC on such purchase of vehicle allowed. GST paid 14 lakhs, ITC allowed to X Limited. Questions are going to come from this area also. Further, my dear friends, see here, a passenger vehicle I purchase, seating capacity 60 for pickup and drop of my employees. X Limited, I am the X Limited. I purchase this vehicle to pick up and drop off my employees. Where I can eligible to avail the ITC? Yes, because it is in the furtherance of business to provide taxable output supply of goods services, well allowed to avail ITC. Though the seating capacity is more than 13, it is using in the course of furtherance of business. ITC is well allowed. How much? 14 lakhs. ITC allowed to X Limited in the given case. This question has been asked in the examination sometimes before. A passenger vehicle purchase seating capacity more than 13 by payment of GST using for the employees pickup and drop purposes is eligible to avail the ITC? Yes, well allowed to avail the ITC. It's not a black receipt, simple to say. Further, my dear sir, a recent circular of the CBSE in the given case with regard to vehicles. As you are aware of that, generally dealers used to purchase the demo vehicles and used to show in the showroom for their customers. Such demo vehicles, when they purchase, it is not meant for sale, used to be capitalized in their books of accounts. If that is the case, dealer is capitalized the vehicle, demo vehicle. If so, it is a plant and machinery nature for them. If that is the case, ensure that dealer should not avail the depreciation under section 32 of the Income Tax Act by capitalizing GST on such vehicle. In the given case, 10 lakhs is the vehicle value, is suffer the GST 28%, namely 2,80,000. On what value you are claiming depreciation being a dealer? The dealer should claim depreciation on 10 lakhs under the Income Tax Act. Then goodbye. In that case, the 2,80,000 rupees GST is eligible to claim ITC because dealer capitalized 10 lakhs for claiming depreciation in Income Tax Act. In that case, ITC of 2,80,000 is allowed to dealer. ITC allowed to dealers. Clarification given by CBSE on demo vehicle to a dealer who purchased the demo vehicles and capitalized in the books of accounts, exclusive of GST, ITC is allowed. On the other hand, if you purchase being a dealer demo vehicle and capitalized that asset in your books of accounts inclusive of GST, in that case, you are claiming depreciation under section 32 of Income Tax Act on the entire value of the vehicle which includes GST. In that case, the GST is not qualified for ITC in a simplified manner. ITC is not allowed to dealer for of cars. So it is with regard to demo cars for a dealer. Now I am bringing to notice the commission agents also used to come forward to promote the vehicles of a manufacturer by hosting the stalls, exhibitions like that. A commission agent, look here, test drive cars is to be used by commission agents to promote that vehicles as a commission agent, not a dealer. In that case, such a commission agent who promoting the vehicle of a manufacturer, he purchased vehicle for test drive purpose and used it for quite for a few kilometers, 300, 400 kilometers. Then they are selling. Who selling? Commission agent selling, because commission agent purchased the test drive car from the manufacturer for getting the customers, and the commission agent is subsequently selling that vehicle. In that case, this particular commission agent eligible to avail the ITC on particular vehicle they purchase, ITC is not allowed because they are not the dealers, they are not capitalizing the asset in their books. They purchase a test drive vehicle as a commission agent to promote the product, providing not the sale of goods, they are supplying the promotional activities. In that case, a particular person, the person sitting here is purchase a test drive vehicle and giving 3 or 4 customers for test drive purpose. After a few kilometers, that vehicle runs and selling to somebody else. In that case, are they eligible to avail the ITC on purchase of that vehicle? Commission agent is not eligible to avail the ITC on such particular test drive vehicles if they purchase. Got the clarity, my dear friends? ITC on such vehicles is not allowed. I will bring one example, numeric example, will make you understand this. Look here. In the given case, if you refer, X being a commission agent, also registered person with GST law, X marketing the vehicle manufactured by Honda Limited and getting the commission 2% on such supplies. Therefore, Mr. X is not a dealer, Mr. X is a commission agent who is promoting the Honda product on commission basis. Mr. X also purchased test drive vehicle from Honda Limited for 10 lakhs, paid the GST 28%, namely 2,80,000. X sold this vehicle to customers after using for test drive for 350 kilometers for rupees 8 lakhs and the GST 28%, namely 2,24,000. Find the net GST liability of Mr. X means, what is the GST liability? The liability to pay the GST on such sale of vehicle is 2,24,000 is the liability. Are they eligible to claim ITC on purchase of the vehicle? No, because the block will create for them because it is a passenger vehicle, seating capacity not exceeding 13, including driver, well clearly comes under the clutches of the blocked credit. Therefore, hey Mr. X, commission agent, you are not eligible to avail the ITC on such vehicles. Said by CBSE in their circular in the recent past. Further, my dear friends, purchase of aircraft, purchase of vessel, purchase of aircraft, purchase of vessel not qualify for ITC to a registered person. However, these two are qualified as input tax credit in some exceptional cases where for further supply of such vessel a vehicle, such vessel or aircraft for further supply, if you purchase, ITC is allowed. Transportation of passengers of that vessel aircraft you purchase, ITC allowed. Imparting training on navigating such vessel or imparting training on flying of such aircraft, ITC is allowed. Or for transportation of goods purpose you purchase vehicle or vessel, ITC is well allowed. Further referring from here, a particular passenger aircraft, a particular passenger vessel, passenger aircraft as well as passenger vessel, ITC not allowed if you purchase. If you take it on hire basis, also ITC not allowed. However, exceptional cases, ITC allowed. For further supply of such vessel or aircraft, I taken a hire basis, namely I taken a hire basis and giving on a hire basis, same line of business, ITC is allowed. Transportation of passenger purpose, if I taken a hire basis, ITC allowed. The GST paid on such hiring charges, ITC allowed. Imparting training on navigating such vessels, for that purpose I taken on a hire basis the vessel by paying the GST, ITC is allowed. Imparting training on such flying such aircraft, in that case I taken hire basis by paying the GST, ITC allowed. Hiring, renting or leasing, if I taken on renting basis aircraft, the rental charges with the GST, ITC allowed if I am using that for further supply or further transportation of passengers, imparting navigating such vehicle, namely aircraft, or if I purchase this particular vessel or aircraft for transportation of goods purpose, ITC is allowed. If I take on hire basis, rental basis, lease basis by payment of GST for transportation of goods purpose, ITC is allowed. Or if it is an obligatory for an employer to provide to the employee, obligatory for an employer to provide to the employee under the law. Government of India says, hey mister, your factory is located far away from the city, therefore you have to be provide the aircraft facility, pick up and drop. Therefore the employer taken on rental basis aircraft and providing to such particular employees on rental basis, rental charges with the GST, ITC allowed. But one thing is very clear, my dear sir, obligation for an employer to provide the same to its employees comes into picture only if it is renting, leasing, hiring of services. Got the clarity? For example, my dear, Reliance company purchased the vehicle to provide to its employees under obligation of a particular law. It is allowed? Not allowed, because purchase the asset, purchase the aircraft, to pick up and drop of employees, ITC not allowed. Instead of purchasing, taken on rental basis, leasing basis or hiring basis, then under an obligation for an employer to provide to his employees under the law, then ITC allowed. So input services ITC allowed if under obligation under the law, thereby the employer providing to employees vehicle pick up and drop, using the vehicle pick up and drop, aircraft or vessel taken on rental basis, hiring basis, lease basis, ITC allowed. Same, for example, my dear, passenger seating capacity is 5, 6, take 5 or 6 including driver, not exceeding 13. Such a vehicle purchased by the company under an obligation of the law to provide pickup and drop service for the employee, it is not allowed. Same company, instead of buying the 6 seating capacity vehicle, passenger vehicle, instead of purchasing, taken on rental basis, employer providing to employees under an obligation of the law, then the rental charges of GST is allowed. Is the way in which you understand. Further, my dear friends, these vehicles, passenger vehicles, seating capacity exceeding 13, aircraft, vessel, all the three on which general insurance services, servicing services, repairs and maintenance services also not qualify for ITC in so far as they relate to a motor vehicle, vessel or aircraft, which is not qualified for ITC if they purchase it. If I purchase the motor vehicle, passenger capacity 5 or 6, I am eligible to claim ITC? No. In that case, I incur the general insurance for the motor vehicle, servicing services for the motor vehicle, repairs and maintenance service for the motor vehicle, ITC also be not allowed. However, exceptions. ITC in respect of such services shall be available where the motor vehicle, vessel, aircraft are used for the purposes specified therein. Meaning there what? If I am buying and selling of these particular motor vehicles, I incur the insurance services, repairing services. Can I have ITC? Yes. Sir, I am providing these vehicles for rental basis, sir, for which I purchase, sir, for the supply, sir. I incur the general insurance services, servicing services means cleaning, washing, repairs and maintenance services. I incurred, sir. Can I avail ITC? Yes, because if I purchase the vehicle for further supply, I am eligible to avail ITC. On such vehicles, if I incurred general insurance services, servicing services, repairs and maintenance services, ITC well allowed. Further, if in the case of a manufacturer, such motor vehicle, vessel or aircraft or in the supply of general insurance services in respect of such motor vehicle, vessel or aircraft insured by him, ITC allowed. What do you mean this? Very simple. Sir, my name is Tata Motors. I am a manufacturer of the vehicles, four-wheelers, seating capacity not exceeding 13. For me, stock in trade. If so, I incurred general insurance, servicing, repairs, maintenance. ITC, well allowed. Further, one general insurance company giving the loss of coverage of vehicle insurance coverage undergoing for reinsurance with the other insurance company, then the first general insurance company is eligible to avail ITC. Don't worry, I am going to explain this with the help of numeric or visualization, lollipop manner, diagrammatic manner I am presenting here. Just look and understand. Presenting here as follows. X-limited person, he is manufacturer of these vehicles, vessel, aircraft, manufacturer of motor vehicle, manufacturer of vessel, manufacturer of aircraft. He incurred expenditure of general insurance on such vehicle, vessel, aircraft. He incurred the servicing services, cleaning, washing and all. He incurred on that expenditure. He incurred on such motor vehicle, vessel, aircraft, repair, maintenance services by paying something amount to suppliers with the GST. He received the inward supplies of general insurance, servicing, repairs, maintenance. Can you avail ITC? Yes, he is a manufacturer of this. For him, it is not a vehicles, not a asset, is a stock in trade for him. Therefore, ITC is allowed. X Limited can avail ITC on this particular inward supplies. Further, there are capital goods. For whom it is capital goods? Y Limited, who purchased this of vehicle with aircraft. If so, using in the business purpose. What purpose? Say for their employees pickup and drop purpose. As such, ITC is not allowed. But Y Limited paying insurance to A Limited premium, that premium with the GST not qualify for ITC to Y Limited, because for Y Limited these are the assets not qualify for ITC if they purchase. So ITC is not allowed on general insurance premium paid to A Limited. A Limited insurance company undergoing reinsurance with B Limited by paying the reinsurance premium. Who is the supplier now here? B Limited. Recipient is A Limited. To cover the loss of stock of this particular vehicle, vessel, aircraft. In that case, A Limited insurance services output supply of A Limited not qualify as ITC to Y Limited. However, B Limited output supply of insurance services is allowed as ITC to A Limited. ITC allowed on reinsurance premium to A Limited. Reason here, why is allowed for him? Why is allowed? Because this insurance company is giving the insurance coverage for these particular assets. For these are the assets. Huge amount of risk. That diluting purpose, A Limited undergoing with the B Limited reinsurance. In that case, B Limited output supply to coverage insurance of these particular vehicles eligible to avail ITC by A Limited. So, B Limited output supply of insurance premium charges with the GST allowed as ITC to A Limited is the meaning of it, to A Limited. Further, my dear friends, presenting here, food and beverages, outdoor catering services. In general, there won't be any ITC. Beauty treatment, no input tax credit, blocked credits and all. Health insurance, health services, not qualify for ITC. Further, cosmetic plastic surgery services, not qualify for ITC. Life and health insurance services, not qualify for ITC. In general, food and beverages, outdoor catering, beauty treatment, health services, cosmetic plastic surgery services, life or health insurance services, ITC is not allowed. However, there are certain exceptional cases where the ITC is allowed. First, prima facie food and beverages, outdoor catering services, beauty treatment services, health insurance services, cosmetic and plastic surgery services, life insurance services, health insurance services, ITC not allowed, blocked crate, prima facie. Further, food and beverages, outdoor catering services, beauty treatment services, health insurance services, cosmetic plastic surgery services, or life insurance services, health insurance services allowed as a ITC in exceptional cases. When means in the given case, supply of same category of services. Sir, I am a provider of outdoor catering services. My name is Anna Caterers. I receive the inward supply of services from Amma Caterers. I can avail ITC? Yes, is the meaning of the same category of services. Or these are the services are the element of composite supply or a mixed supply, and output supply is taxable supply, ITC is allowed. What do you mean this? Sir, in the given case, a hotel wala providing short-term accommodation services along with the breakfast free, which is a composite supply. In that case, the inward supply of breakfast outdoor catering is allowed as ITC for a hotel fellow, though he is not the same category of business, but it is an element of composite supply, because hotel wala charging the room per day per room rupees 2000, which includes short-term accommodation services, which includes breakfast services. In that case, such a catering received by hotel wala from somebody else by paying the GST can avail ITC? Yes. Or otherwise, if it is obligatory for an employer to provide to the employee under the law, in that case, ITC is allowed on the food and beverages, outdoor catering services, beauty treatment services, health services, cosmetic services, plastic surgery services, life insurance services, health insurance services. Furthermore points are there, my dear friends. Membership of a club services, health and fitness services, followed by leave or home travel services, ITC in general not allowed. However, if it is obligatory for an employer under the law to provide to its employees, ITC is allowed. Very simple to say, ITC is when allowed on membership of a club, health and fitness services, leave or home travel services. When ITC is allowed, if it is an obligatory under the law to provide by the employer to its employees, then ITC is allowed. Further, my dear friends, works contract services, as you are aware of that, works contract services also not qualify for ITC. Why not qualify for ITC? Because it is in relation to construction of an immovable property, like this, construction of immovable property, or if it is works contract in relation to installation of a cell tower, or if it is in relation to laying the pipeline outside the factory premises, such purpose works contract services are received, ITC not allowed. When the ITC is allowed means if the works contract in relation to plant and machinery allowed. What is not a plant and machinery? Land on which construction, not a plant and machinery. Laying the cell tower, not a plant and machinery. Laying the pipeline outside the factory premises, not a plant and machinery. If so, apart from this, that means what is not this is called plant and machinery. For example, if you refer here, I want to construct a particular foundation layer. I want to construct this particular foundation layers, this pillars, the foundation pillars, this pillar, and this pillars. I want to construct. For which I receive the works contract. What for? For laying plant and machinery thereon. A foundation structure for supporting structure to support the plant and machinery, for which I receive the inward supply as a works contract services. IT is allowed because it is not a construction of an immovable property of a civil structure, or it is not a cell tower, It is not a pipeline laying outside the factory premises. Therefore, it is a plant and machinery. So, works contract in relation to plant and machinery, supporting structural support to the plant and machinery, for which if I receive the inward supply of works contract, ITC is allowed. Otherwise, ITC not allowed. In what circumstances ITC is not allowed on works contract? In the case where what is not a plant and machinery, works contract if I received for construction, then ITC not allowed. Works contract service I received for laying the pipeline outside the factory premises, ITC not allowed. For construction of a cell tower purpose, works contract service I received, ITC not allowed. Got the clarity, my dear friends? However, ITC is allowed if I receive the works contract service for constructing foundation to support my plant and machinery purpose, then ITC well allowed. Further, my dear friends, I am presenting here for a kind consideration. The points are as follows. In the given case, A Limited, factory building, not a plant and machinery, which is received works contract from B Limited. B Limited output supply to A Limited, B Limited output supply to A Limited is not qualified for ITC, because for A Limited this works contract service is a blocked credit. A Limited not eligible to avail ITC because he received the works contract for construction of an immovable property which is not a plant and machinery. Therefore, ITC not allowed. Therefore, ITC not allowed to A Limited. Now, works contractor B Limited purchase the cement, sand, iron, steel and all. In that case, that inward supply on which GST ITC is allowed to works contractor. B Limited can avail the ITC of the GST paid on cement, steel, iron. Got the clarity, my dear friends? Further, presenting here, a factory, A Limited factory building, they are constructing factory building by receiving the inward supply from B Limited works contractor. As you are aware of that, A Limited cannot avail the ITC on inward supply of works contract supplied by B Limited. You are aware of that. Further, being a B Limited works contractor subcontracted to some other works contractor from C Limited, receive the works contract services by B Limited. In that case, the output supply of C Limited being works contract services is qualified for ITC to B Limited. Yes, for B Limited is an inward supply eligible to avail ITC. B Limited being a main contractor receives the works contract service from subcontractor by paying the GST which is allowed as ITC to the main contractor. Got the clarity, my dear friends? Further, sir, a case where A Limited being a manufacturer of output supplies, he is constructing a factory building by not receiving the works contract service. He is receiving only labor services from somebody else. He purchased on own source cement, iron, steel. By own he purchased and received the only labor service. In that case, ITC allowed to A Limited. In that case also, ITC is not allowed to A Limited. Why ITC is not allowed to A Limited? Because A Limited is received the inward supply of inputs and input services for construction of an immovable property which is blocked credit under section 17 subsection 5 clause D. Therefore, ITC is not allowed. If you refer here, you understand this. A Limited being a manufacturer is not eligible to avail GST on goods and services received for construction of an immovable property on his own account, including when such goods or services or both are used in the course or furtherance of business. Further, my dear friends, being a trader, I opted to pay composition scheme. A composition taxpayer, as you are aware of that, not eligible to avail ITC on the inward supplies. they are going to pay the GST 0.5%, CGST 0.5% GST on their output supply. In case of trader, taxable output supply. In that case, ITC not allowed to such a person who opted the composition scheme, as you are aware of this. Further, my dear friends, here ITC is not allowed to trader because he is a composition taxpayer. This point we already referred in earlier sessions also. Further referring here, NOTP, non-resident taxable person who import the goods by paying the IGST and locally purchase the goods by paying the CGST, SGST, non-resident taxable person not eligible to claim ITC except import of goods on which IGST paid. Except this, there is no input tax credit. That means NOTP, non-resident taxable person, can avail the ITC only on import of goods IGST. Locally, whatever they purchases, intrastate purchases, they are not eligible to claim ITC. So, in the given case, I will say simplified manner, outward supply 1,50,000, ITC paid on inward supply is not allowed ITC except IGST paid on import of goods. So, IGST paid on import of goods, ITC is allowed to non-resident taxable person. Further, my dear friends, if you refer here, my dear sir, CSR expenditure, corporate social responsibility. Here what happened? A company incurred expenditure for housekeeping, this entire housekeeping purpose, out of their corporate social responsibility fund. Specifically, now it is a block credit from 1st October 2023 onwards. Housekeeping and gardening services incurred out of CSR fund, corporate social responsibility fund, created by the company. From that fund, the expenditure incurred to get the inward supply of gardening, housekeeping services, which is clearly blocked credit. Hence, ITC is not allowed on such inward supplies. Further, my dear friends, goods or services are both used for personal consumption. Sir, I purchased the goods being registered person by paying the GST 1,20,000, the royal paint, which I am using for my bedroom purpose, personal purposes. ITC not allowed. For the personal purposes, you use the input goods or input services, ITC not allowed. It's a black credit. Further, my dear friends, ITC not allowed if I use for personal purposes. Further, sir, if I purchase the goods, I produce the finished goods, before clearing that finished goods got gutted in the fire, the inward supply ITC not allowed. If I given freely, if I given this beautiful cars freely distributed to my friend circles, or given as a gift or sales promotion purpose I given, ITC not allowed. If I given as a freely written off in the books of accounts, or it may be distributed as a sales promotion purpose, or the goods are maybe before clearing got gutted in the fire, or if the goods are thefted or stolen, in all these cases, on such inward supply, input tax credit is not allowed. Further, my dear friends, an important point, my dear. If you paid the tax being a seller under section 74, the recipient not eligible to avail ITC. Under self-assessment tax, if you paid tax, recipient can avail ITC. Being a seller, you paid the tax under section 73, namely a particular notice. In the case other than the fraud, ITC can be allowed to buyer. If the seller being ex-limited paid the tax under the notice under section 74, namely fraudulently evaded the tax, in such case recovery of tax takes place, seller pay the tax, that cannot be eligible to claim ITC to the buyer. Further, one more point here I am bringing. If the tax has been paid in lieu of seizure of the goods under section 129 of the CGST, the buyer of that goods not eligible to claim ITC. Similar way, vis-a-vis, you can also be understood a case where supply of goods where GST liability arises, that goods has been confiscated by the department, the taxpayer going to be pay fine in lieu of confiscation and also paid the tax to release the confiscated goods. In that case, that released confiscated goods is given to buyer. The tax paid by the particular taxable person under section 130, namely confiscated goods, has been released on payment of fine. In that case, tax also is going to pay on such goods. Such a tax paid by the seller not eligible to claim to the buyer as an input tax credit, because here very clearly says that the law is very clearly says that if you pay the tax under section 74, case of fraud, section 129, seizure of the goods, section 130, confiscation of the goods, there you pay the tax. That paid tax by the supplier of the goods not qualify for ITC to the recipient of that goods. Is clear, my dear friends? With this I can say that the block credit concept has been completed. Furthermore, we have the points to refer on the input tax credit, special circumstances under the GST, section 18 of the CGST is also we will refer in subsequent class. Thank you, my dear friends. Thank you to one and all.